Hey, stop guessing how much you need to retire in Singapore. Is it $2,000 a month? $4,000? Or do you actually need a full $8,000 or even $12,000 to live comfortably? Most Singaporeans are asset-rich but cash-poor. We own expensive homes but don't have enough cash flow to actually enjoy retirement. In this video, I'm going to break down exactly what $2,000, $4,000, $8,000, and even $12,000 a month can really buy you. And most importantly, I'll show you how to build a retirement plan using CPF LIFE, dividend investing, and property so you can retire earlier, enjoy more of your healthy years, and never worry about running out of money. So yeah, stay with me till the end, because I'll show you how to combine these strategies into one simple plan you can follow. And if you find this video helpful, hit that like button so more Singaporeans can see it, and subscribe to Wealth for You for weekly retirement and investing guides. Chapter 1. What retirement really means. Before we dive into the numbers, let's take a step back and picture what retirement really looks like. Retirement isn't just about turning 65 and walking away from your job. It's about waking up each morning with freedom of choice, working only if you want to, not because you have to. It's about peace of mind, knowing that your daily expenses are covered by passive income, not by dipping into your savings. You don't have to check your bank balance before saying yes to dinner with friends. And it's about living fully in your healthiest years, taking that trip you've been dreaming of, spending time with your family, and picking up hobbies you never had time for, all without the constant fear of running out of cash. This is why being cash flow rich matters more than just being asset rich or sitting on cash. It's about creating a stream of income that funds your life every single month without selling off your assets or worrying about depleting your savings. Chapter 2. Know your retirement number. Now that we know what retirement really means, let's talk about the number that will make it possible. Imagine this. With about $2,000 a month, you can cover the bare basics: food on the table, bills paid, transport taken care of, but little else. No frills, no room for surprises. Bump that up to around $4,000 a month and life feels more comfortable. Your house is fully paid. You can take a modest holiday once in a while, and eating out occasionally doesn't break the bank. This is what many Singaporeans consider a normal middle-class retirement. But if you dream bigger, say $8,000 a month, now you're talking about owning a car, enjoying premium healthcare, traveling overseas regularly, and dining at nicer places without guilt. And for those chasing a truly super luxury lifestyle, $12,000 to $15,000 a month, think business class flights, top-tier medical care, and total freedom to spend without hesitation. Here's the part most people forget. Inflation never sleeps. At just 3% a year, today's $4,000 normal lifestyle will cost you over $7,200 a month in 30 years. That's why you can't just pluck a random number like $1 million to retire out of thin air. You need to plan based on real numbers and realistic future costs, or risk coming up short when it matters most. Chapter 3. Plan around healthy life expectancy. Let's look at the numbers for Singapore. Life expectancy at birth here is around 83.5 years and is projected to climb closer to 85 by 2040. But here's the key detail most people miss. Our healthy life expectancy, the years we can live free of major illness or disability, is only about 73.6 years. For men, this number is slightly lower, and the improvement over the years has been slower than we'd like. In other words, waiting until 65 to retire might only leave you with 7 to 8 truly active, healthy years. The years when you can still travel, hike, golf, or spend full days out with your family. This is why it makes sense to plan for 58 as your retirement or semi-retirement age. You don't have to stop working completely. Many Singaporeans choose part-time consulting or passion projects. but you're giving yourself more healthy years at the front end of retirement. Whether your target lifestyle is $2,000 or $8,000 a month, these are the years when you'll get the highest return on life, when your body and mind can fully enjoy the freedom you've worked decades to achieve. Chapter 4. CPF Life as your cornerstone. CPF Life should be the bedrock of every Singaporean's retirement plan. It's a guaranteed, government-backed payout that lasts for as long as you live. No market risk, no fear of running out of money. The goal is simple: maximize your CPF Life payouts so they cover as much of your core retirement expenses as possible. Here's how to do it. Top up to the Enhanced Retirement Sum (ERS). By growing your retirement account to ERS, you lock in a much larger lifetime payout stream. Use cash top-ups and CPF transfers early. Topping up your CPF Special Account, or RA after 55, as early as possible lets your funds enjoy years of 4% compounding interest, meaning bigger payouts later, without you needing to find extra money near retirement. By 2038, the projected ERS could give you around $4,600 per month in today's dollars. That's enough to cover most of a normal 4K-month lifestyle, even before you touch your investments. And here's the mindset shift. CPF Life is your safety net. Once you know your basic needs are covered for life, you can invest your other assets more confidently, focus on growth, and even take on slightly more risk, because your foundation is secure. Chapter 5. Invest early and consistently. If your dream retirement is $6,000, $8,000, or even $12,000 a month, CPF Life alone won't get you there, and that's okay. Think of CPF Life as the foundation. The next step is building the house your investment portfolio. Start by building a globally diversified, income-focused portfolio. Mix bond funds for stability, REITs for steady rental income, and dividend-focused ETFs and quality dividend stocks for growth and rising payouts over time. But here's the mindset shift that separates successful investors from the rest. Stop obsessing over timing the market. Instead, focus on steady accumulation, buying regularly through good times and bad. And when those dividends or coupon payouts come in, reinvest them. Let compounding quietly snowball your wealth in the background while you live your life. Here's why this matters. A $600,000 portfolio yielding just 4 to 5% can produce $2,000 to $2,500 every month. And that's without touching your capital. That's what it means to be cash flow rich. Your lifestyle is funded by income streams, dividends, coupons, distributions, while your principal stays intact. Even during market downturns, you can sleep soundly knowing your cash flow continues to arrive every month. Chapter 6. Property as a lever. For most Singaporeans, property is their single biggest asset, but too many treat it as a locked-up store of wealth. If you want a truly stress-free retirement, you need to make your property work for you, not just sit there on paper. Here's how to turn bricks and mortar into cash flow. Rent out your spare rooms. Even one room in an HDB can bring in roughly $1,000 a month. Rent out two, and you could be adding $2,000 of steady, tax-efficient income on top of your CPF Life and dividends. Downsize or right-size when kids move out. Selling a large condo or 5-room flat and buying something smaller can free up hundreds of thousands in cash, which can be invested to generate more monthly income. Consider the HDB lease buyback scheme. This allows you to monetize part of your flat's lease while continuing to live in it, turning a portion of your home equity into CPF Life top-ups that increase your payouts for life. And here's a critical point. Plan to be mortgage-free by 58. Entering retirement without debt gives you peace of mind and frees up thousands of dollars each month that would otherwise go to the bank. That money can now go toward funding your retirement lifestyle instead of paying interest. Property isn't just a trophy or an inheritance for the next generation. it can be a powerful part of your cash flow strategy. When you combine a paid-up home with rental income and dividends, you create multiple streams of passive cash flow that make your retirement far more resilient. Chapter 7. Protect your health. Your $4,000 or $8,000 a month retirement plan, honestly, means nothing if you're too sick to enjoy it. The most valuable asset you have isn't your CPF, your REITs, or even your property. It's your health. So, make it a priority. Exercise regularly. Keep an eye on your BMI, go for annual health screenings, and, cut back on sugar and those late-night habits that silently erode your quality of life. And don't forget protection. Make sure to upgrade your CareShield life coverage. With 1 in 2 Singaporeans likely to face severe disability after 65, this step ensures that long-term care costs won't drain the portfolio you spent decades building. Because, really, every extra healthy year you gain isn't just time. It's freedom to travel, to enjoy your hobbies, to be with family, and to actually live the retirement you worked so hard for. Chapter 8. Boost your savings rate. If you want a $4,000, $8,000, or even $12,000 per month retirement, you can't just save what everyone else is saving. The average Singaporean puts aside 10 to 25% of their income. But if early retirement is your goal, aim for 30 to 40% or more. This isn't about deprivation, it's about buying back your freedom faster. Build a 6 to 12-month emergency fund so you can invest with confidence. And when the markets crash, instead of panicking, see it as your opportunity to scoop up assets on sale. Those moments, honestly, accelerate your path to passive income like nothing else. Chapter 9. Design for peace of mind. The ultimate retirement plan isn't just about hitting a magic number. It's about peace of mind. Aim to fund your life with passive income from CPF LIFE, dividends, and rental cash flow, while keeping your capital intact. That buffer is what lets you handle medical surprises, help your children if needed, or just sleep well at night. When you do this right, you get to choose. Do you want a $2,000 subsistence retirement or a $12,000 dream lifestyle? The power is in your hands, not the markets, not your bosses. Final thoughts. So, how much do you really need? $2,000, $4,000, or $8,000 a month? Here's the truth. There's no one-size-fits-all number. The right plan is the one that matches your dream lifestyle and gives you freedom during your healthiest years. Start today. Use CPF LIFE as your safety net. Build a dividend-paying portfolio and turn your property into a cash flow machine. Comment below. Which retirement lifestyle are you aiming for? Subsistent, normal, or luxurious? If you found this video helpful, smash that like button, share it with a friend who's planning for retirement, and subscribe to Wealth for You for weekly Singapore-focused strategies, so more Singaporeans can take control of their financial future.